Good morning, everyone. Welcome to the Modern Market, where every day we discuss every single thing to do with the market that we are trading and investing in. It is the crypto market, the NFT market, and how to hopefully make some or a lot of money on the internet. Loaded up for discussion today. A few important things. Bitcoin did run almost, I think it actually might have touched 107K briefly before sharp pullback to $102,000. And we're going to be talking a bunch of macro today. There's all kinds of interesting stuff going on. We've got Trump's tax bill progressing, which is estimated to add around 4 trillion to the deficits over a decade. We've got Moody downgrading the US credit rating. Besant coming out with very interesting comments about the debt to GDP ratio. US Treasury yields are rising. Japan's 40-year bond is rising. So we're going to be touching on all those things, try and thread all of these things together to make it digestible and make it make sense. So we'll get into all of that and more as usual. Also talk in general about crypto price action and NFT price action too, as well as some other interesting discussions. No doubt I have Legendary and Bread in the co-host seats with me. We're ready to get into it today. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is, of course, risky. And so you need to proceed with caution. You need to not take anything as financial advice, and you need to do some research all the time, endlessly, without stopping. With that out of the way, Legendary, it is Monday. It's the 19th of May. How are you doing, and how are you feeling today?
In GMG, I'm doing quite well. Another number that I'm currently tracking is my sleep, and I'm very, very happy that my Aura ring is now basically saying I'm pushing my sleep into the 90s. So 90 out of a 100 score very, very consistently over the last couple of weeks. Even pushed 94 yesterday. And I'm still chasing after years of owning this ring, this like one single magical night where I get a 100 out of 100 score. But overall, sleep quality has been trending up, which is quite cool to see.
This is not a real metric. It's not real. It doesn't exist. 94 out of 100 sleep. It's not real. It doesn't make it. It's not a real number.
It is a real
number.
What's
the denominator? Like, what's the it's like Kaito yaps sleep. What sleeps? 100 out of 100 sleeps.
Sleep score.
You got me checking my stuff. I've been taking it off. So I have a Garmin watch. I've been like, I'm a fan of this sleep tracker. I know it's a myth. Everyone keeps saying that, like it doesn't mean anything, but it's still you want to do better than yesterday, right? Everyone's trying to improve. But I keep taking it off. Like I've had a watch on for so long that like my fucking skin is giving way right there. I'm getting little rub spots and shit for having it so long. So I've fallen away from some of the metrics and just like I'd rather have my skin.
It's freedom. Watchless. Yeah. Absolutely watchless.
Watch his rings.
I hear the rings are actually pretty good though for like the quality of the info for tracking.
Yeah, data quality is pretty good, and it's interesting to track that. I mean, obviously not everything is going to be perfectly accurate. You definitely can see long-term trends in there and how they evolve, and often it's quite freaky if suddenly your HRV, your body temperature, some stuff changes, and then the algorithm says, hey, did you do this and that last night? And is this why your biomarkers look like that and why you slept worse? And you're like, shit, I think it's actually good.
You know what I started looking into? TRT.
Go. What's that?
It's testosterone.
Replacement therapy.
Mm-hmm. Yeah. It's legal. Right? You just go... yeah, man, maybe eventually. Like, yeah, like I said, it's legal. You go and basically get your testosterone tested. Like, I'm getting older. I'm in my 30s, right? So, like, you're starting to, after, like, I think it's 28, you basically just, like, peak and then decline. So, it's less about, like, oh, you want to be a fucking bodybuilder and juice to the max. And it's more like you want to keep your levels normal. And so, you know, muscle retention, like your metabolism, your energy, like all that stuff. You just, like, basically keep that at a nice level, your maintenance level. English says TRT is amazing. That's good to hear. I hear great things. And like I said, it's legal. Like you can just go get a prescription from your doctor if you're seeing your levels are actually failing or falling. So I want to actually get that assessed. Like I'm trying to get better about my blood work. And then I think I'm probably going to get on TRT.
Yeah, I want to do it as well. I'm 33 as well. So definitely on a decline, but I see Funky has his hand up. He's a bit older than us, so quite curious to see what you have to say on our TRT chat, Funky.
What are you guys talking about? You guys
Welcome to our crypto show.
I am gonna be 50 in like a couple months, and my total testosterone is 535. Like I'm in the middle of the range. None of you young strapping dudes need
Listen,
TRT.
bro.
Yeah, you tell them, Funky. They've gone crazy. Data has gone crazy here. This is big data gone mad.
I actually think it's been something for my entire life. I think I've actually been someone that's been just a low test person most of my life.
Nah, you can't tweet the way you do, Bread, being low T. You got too much T to tweet the way that you do.
Yeah,
you got it.
I can muster it up. It's very focused energy.
Yeah, and actually we've got one of your high energy tweets to talk about a little bit later today. But before we get there, let's get into all of the price action as usual to get you up to speed with everything that is happening in the space. Starting with the price action, as usual. Apologies for my voice. I'm still a little bit sick, to be honest, but let's go. Bitcoin is down 1% at 103K. As we said, it kind of spiked towards 107K overnight, and then it didn't want to go past all-time highs because everyone probably put on a ton of leverage. So that's probably what happened there. ETH is down 4%, just like we are used to, back to 2.4K. XRP is down 3% to $2.30. BNB is flat at 640. Solana is down almost 6% to $161. Just checking in our other two kind of almost majors. Sui is down 5% to $3.70. That went as high as $4 not long ago. And Hype is also down 5% back to $25. So potentially a nice entry here for anyone looking to get into Hype. Getting into the meme coin side of things, we have Doge. Everything's red, basically. Long story short, everything's like single digit red from what I can tell on maybe the more established memes. Something like Fartcoin's down as much as 7% today, down to $1.19. Pepe's down 5%. Pengu's down 7%. Yeah, that's the kind of the same story everywhere here, to be honest.
I love it. I love it. I've been, even if this is like a fake pullback, like I think this is what I needed, like just in my heart to like, I needed to see some level of like vindication for like not deploying over the last, like, even if like had I deployed a month ago, I'd technically be up in this moment. Like, but because it's increased 30% and now it's pulled back 10%. And like, now I feel vindicated. So like, oh yeah, fuck, now I can deploy. I was right. I'm so fucking prideful. Right. But yeah, like I enjoy this. This gives me the confidence to actually just like start looking at deploying.
But even the way you phrase that, to start looking at deploying, just press the button.
Yeah, correct. It's going to keep going up. And like, that's the problem. This is the problem I've always had. It's like, oh, it's 10%. I need more than, if it was 11%, then this would be the move and I would deploy. And then it's going to rip another like 15% and then I'm going to lose out.
Yeah.
Oh, the math doesn't work out there, but yeah.
Got to get Bread pressing the buttons more in general. Sorry, go on.
I said low T confirmed.
Oh. The only two high T coins in the market at the moment are actually Virtuals and Kaito. These are the ones that like completely outperformed everything. Kaito's up 10% to $1.90, and Virtuals, let me just double check. Virtuals was okay, it's down 1% now. But it's still like it's only down 1%. But that was looking pretty good. But yeah, Kaito was up 10% when I did it last, pushing towards $1.90 as well.
And where's Hype? Yeah, that's what we're going to be talking about.
Hype was down 5% to $25, or maybe a touch more. Yeah. Okay. So that's the roundup in terms of the coins. Getting into the headlines themselves, it's going to be a bit of an interesting show today. To be honest, when I was doing the research, it didn't feel like there was a lot. It was like you had the news, which is the price action itself, which is that Bitcoin almost went to all-time high, then it before pulling back sharply. And then
what are we actually at for all-time high? Like, what is the bar?
Was it 108? Funky should know. I should know, frankly. But Funky, do you know what Bitcoin all-time high was?
109.
109, yeah. So it was in that region. So yeah, we got pretty close. It touched 107. But then beyond that, we had like a ton of interesting things being said by relevant people, and just like kind of regulatory or government development. So Trump's tax bill progressed, which is estimated to add 4 trillion to the deficits over a decade. Moody's downgraded the US credit rating. Besant signaled that the debt to GDP ratio is not going to be improved by cutting the debt. It's going to be improved by maximizing GDP. Treasury yields started rising. Japan's 40-year bond started rising as well. So we're going to be like breaking all of those bits down, trying to tie those together in today's show, as well as doing the little review. Me and Legendary had a call on Saturday night. It lasted like 2.5 hours. I wrote a little summary of that. We'll maybe pin that later and talk through some of our thinking and lay that on top of the news that we just had that has come out, and just think like, okay, is this still I think most of it still stands, irrespective of these kind of more recent moves. So that's what we'll be doing for today's show. Less like, individual headlines, but getting into the rest of the price action. We've got ETH down 4%, Sol's down 5%, Hype's down 3%. Memes are red across the board. As I said, Launchcoin, which was kind of hot last week, is actually pretty solid at around 200 mil. It's down 15% today, but still kind of holding that 200 mil range. And as I said, Virtuals was showing strength. It was up a few percent before, but it looks like it's down now just a touch. And Kaito is showing strength as well. Anything we need to know on the NFT side, Legendary, as market's kind of pulling back a touch?
Actually, NFTs have been outperforming in a sense over the last over the weekend. Pudgies are back above 10 ETH, up 1%, Doodles up 3%, Meditas up 1.5%, Bored Apes up 1%. That is, again, over the last 24 hours. However, over the last 7 days, we are mostly still down in the double digits, ranging anywhere between 10 and 13% for the major collections. Apart from that, not much going on, honestly.
Fair enough. So those things might be static, but there were a few notable sales. CryptoPunk Zombie sold for 440 ETH. I think it was on Saturday. It's more than $1 million. The rest of the roundup, again, I didn't feel like it was a huge amount. Japanese investment firm Metaplanet bought another 1,000 Bitcoin, or a bit more than that. El Salvador President Nayib Bukele shared a screenshot of their unrealized profit, which promptly sent the price down, like however many percent Bitcoin is down. US Senate to vote on stablecoin regulation with the Genius Act as soon as today. That's obviously super important. It was rejected last week. It kind of became a little bit partisan. People were kind of complaining about Trump's involvement in crypto and raising other kind of questions about its legitimacy. It sounds like they might be compromising this week, but we'll monitor that. In other news, the Arbor's agent settled around a $12 million market cap, which is the latest hyped launch on Virtuals, which is more than a 50x, I think, for the people who participated. An interesting NFT here, TokenWorks minted 256 NFTs for 1 ETH each. That's raising 256 ETH. It's a studio to fund creators, vesting over time instead of an immediate transfer of funds. I think that's one of the problems with NFT raises, where everyone just gets all this money immediately and might not necessarily execute in a trustworthy way. Was this meant to be like a potential solution for that? They're not tradable though, so you cannot trade these. It's just quite a significant 256 ETH raise, so that's pretty interesting, done by Rhinotic.
I minted that. So you talked about the do you know you can return the actual funds?
Yes. So you can burn it, right? If you don't want to participate.
But it's a pro rata, like they can do whatever they want with the funds, and you always get a pro rata distribution of the funds that are remaining. So like, in 2 months, over those 2 months, if they've spent 30 grand, right, that's 30 grand that's eaten out of the total pie, and then you get a pro rata distribution of the remaining ETH. I minted one of these because I looked into like the dude that actually did it, and he's really creative. Like if you've seen some of the other projects that he's done in the space, they're interesting, and it's a lesson that you see that he's learning over time. Like he's the one that did the Shape NFT deployment, wherever you see like the actual circle or whatever it was that actually changed. He like did something with the content coins or whatever, to where like every buy and sell on the content coin that he had changed the image to be either a happy face or a sad face or a content face. So like he does all these things. He writes out his follow-ups of like what he learned, what he didn't learn, kind of like understanding the market, understanding people. So like that's like, yeah, like fuck it, I'll give this guy some money to keep fucking around, because like if he's caught some viral stuff in the past, maybe, you know, I'll get some exposure to some of those things in the future.
Thing that you need to know, remember how we spoke last week about that photo where it was like part of my investment thesis for Infinex was like seeing a photo and knowing who people were, and then therefore by knowing who someone is, you kind of figure out like, okay, this might be worth supporting. Before Rhinotic did those things that you mentioned, which is also cool, I've known of him. I don't know him personally at all, but I think he's a mod in the Xcopy Discord. He's one of the biggest Xcopy collectors. He's one of the biggest art collectors in general. And he usually collects like, he's usually very early, or at least in that 2021 to 2022, 23 period, he was always super early to collecting like the best stuff. Super well positioned. I think he also sold Vulcan to, you know, that Discord thing, the Discord security thing. I might be making this part up. All the art stuff is definitely true. Yeah. I'm pretty sure they sold Vulcan.
Yeah, it's associated with Vulcan too. Yeah, that was part of my reason for doing it.
Yeah. So when you like put all those things together, that would have been one of my reasons as well for minting this thing. I didn't see it in time, but to your point, knowing the person behind it, because the initial reaction to this would be like, what, you're just giving someone 1 ETH? What's the return? It's not tradable. Like, what are you doing, right? But I think a lot of your reasoning there is good, and I just wanted to add a few more bits to the story. So that was kind of a cool thing. And then on the social crypto side, Brett, I'm going to ask you to talk to this part in a second. The PT on State Kaito has risen to 44% as the market is bidding YT on Pendle. The Kaito founder Yuhu shares thoughts that people are waking up to the earn and drop season for State Kaito holders. That might be a bit of a mouthful for people who are not super sophisticated about Pendle, but I'll touch in with Brett there in a second. As I said, Kaito is showing strength against the rest of the market. It's up 10% to $1.90. Although it was when I wrote this, it might be a touchdown now. And then finally, OpenLedger announced a reward month of Yaptopus. Ranks 1 to 25 will share 15K pool. Also a specific similar pool for the Chinese region, which I thought was interesting approach to have like.
That's specifically for their pool, right? Or their circle, right?
Yes.
It's not just like a broad Yapper thing.
Correct. Which I think is interesting to kind of separate by geography. But look, that is the roundup. We're going to get into that much bigger macro conversation, which is multi-layered and pretty interesting. We're going to tie that in with our personal conversations over the weekend about our general thesis for how things are going to play out in the next few months. But before we get there, Brett, it might make sense to come to you here. You've been not necessarily preaching about like this PT stakes Kaito thing that you're in on Pendle. I think it's pretty interesting. Why do you think that it is interesting? What is it, and why do you think it's interesting for people who are listening?
I'm gonna give everyone a little bit of a history lesson. So, okay, Pendle, right? Pendle is a platform that is spawned up specifically to tokenize yield on assets, right? So we've talked about it previously on the show. We had exposure to it during the liquid restaking phase. I got fucking burned on it pretty hard, if I'm being honest, because I went aggressive on one side of it. But the main component, like the main product that the Pendle offers outside of like the VE33 voting stuff, is that you have an asset, right? Previously, again, in the LRT world, it was ETH, right? ETH then was used to restake into protocols. Those protocols would then give you points and or yield associated to the things that you were staked to, right? So Pendle would take the two assets that you now have, or it had the one asset that you had, the actual principal side, which would be ETH, and then the yield bearing side, which would be like the yield from the points or from the whatever. And it would split those two things into separate products, right? And create a pool against it so that you could sit there and you could say, I'm willing to put in my 1 ETH, let's say, and buy just the yield associated to everyone else's yield or everyone else's ETH, right? So like I would give the market my ETH in exchange for all of their yield, thinking that they mispriced the yield, right? Let's say it's like market was expecting it to be 15% on the ETH, and I think it's upwards of 30 to 50%. I think it's underappreciated. I could get leveraged exposure to the yield side of that by sacrificing my ETH, by effectively purchasing it over a market duration, right? So like that's the main product of Pendle, is it just takes a thing, separates it into stuff. Bringing that to Kaito, right? Kaito, we're sitting here talking about Yaps points, Yaps runs, staked Kaito earnings, all this shit. They have Kaito on the platform. So you have Kaito, the actual token. You have, well, staked Kaito is what becomes the yield bearing element of Kaito, right? You stake it, you get some of the emissions, you get some of the rewards from some of these things like the protocol I have here. Infinex just committed 20% of their Yap run product to stakers. It also qualified for like the Boop airdrop, all this stuff, right? So these are all opportunities that make money just by staking yield or staking Kaito, right? Okay, cool. Well, in the past, I bought the yield side of this stuff. I got absolutely fucking murked. I looked at my P&L. I think I lost 25 ETH, roughly. Yeah, I got nuked. The points they gave me was like dog shit. Yeah, I went heavy. I thought restaking was the world. I got right. Now, you can take that as a loss. It's cool. You technically burn your ETH to do that, so that counts as a loss. Then you get points that are worth $3,000. It fucking sucks, but whatever. You can recover some of it. Anyways, right now, because of all these opportunities for Kaito, people are getting bowled up on Info5 Future. I noticed that the Kaito pool, because there's the PT side, PT being the principal side, YT being the yield side, and then there's an LP, which is just like serving as the liquidity for everyone else to do all the trading. The LP side, which does not give up any position, and it does, including your yield, you get some of the yield, is up to 50% APY, just for providing liquidity on the platform. Now, in doing that, you no longer have staked Kaito attributed to your name. So like you are giving up a little bit of like the direct yield that you might be able to claim on, like, again, let's say the Boop airdrop. So your calculus becomes like, do you think 50% APY on your Kaito? So like almost doubling down on your direct Kaito exposure plus a little bit of Pendle exposure, Pendle being the product itself, is worth sacrificing the immediate yield. And me being a man who got fucking obliterated in the past, I'm taking the safe side of this. 50% APY on my Kaito. Let all the other degens start speculating. I'm just going to sit here. I'm going to accumulate Kaito. I'm going to accumulate Pendle. I'm going to let everyone else do the speculating and live my life earning Yaps on the timeline, which, should give me Kaito distributions weekly or bi-weekly whenever they end up dropping that stuff.
Excellent explanation. So you're basically foregoing any of the staked Kaito benefits by putting your Kaito into Pendle and taking that yield. When you told me this yesterday when we had our chat, I was like, damn, 50%. Very rarely does anything beat 50%, realistically. Very, very rarely is anything going to beat 50%. And as you say, because of the multi-layered way Kaito distributes rewards to people, you're still going to get your Yaps. Like, you're still going to get your Yaps if you yap about Infinex, just as an example, because they've got their live thing. Having staked Kaito doesn't affect whether you're going to get your Yap points for Infinex. So you can like target it in
Although
that way.
It does amplify them. It amplifies your mind share, right? So like that, it's not rolled out yet. The plan is to have it to your stake. Kaito can be effectively delegated to particular projects to impact your mind share growth for that project, right? Like, so if I had that same amount in Kaito and I delegated to Polkadot, for instance, then my mind share in Polkadot would grow quicker, easier.
Yes.
So it might reduce some of the load there.
That's a good point. So that is a
same
feature,
with the NFT.
That is a feature that is getting built out at some point soon. So interesting. Look, I thought it was an interesting opportunity that Brad brought up yesterday. So I wanted to bring that to other people's attention too. Just an alternative way to get yield on Kaito if that is something that you are in. Ledge, a quick comment on that opportunity. Which way would you slice that? Do you kind of like staking your Kaito or holding it or putting it in Pendle, or what's your take there?
I got all of my Kaito staked. I think the Pendle one is an interesting one. I personally think that I might move some of it to have that on Pendle. I've been using Pendle a lot for my stablecoin farming on Sonic either way. So it is a platform I'm familiar with. I have Pendle staked as well. I just think that I still want to have a significant exposure to Kaito via staked Kaito, just given that I earn, I would say, a good amount of yaps, and I think the potential upcoming opportunities that might be tied to a certain threshold of Kaito being staked are still more than worth it for me to like keep that amount staked. And if I move a bit to Pendle, it's not going to be the majority of my Kaito stake.
Okay, so you still prefer the staked Kaito section? For me personally,
speculator.
for me personally, this was my thinking. I was thinking I staked half of it, held half of it, just clean, thinking if the price goes up a ton, I could sell it and then just be riding the staked Kaito for free. But I think I might just stake the rest as well. Or put it in Pendle. I kind of like this Pendle thing. I want to digest it a bit more, but I think it's a cool alternative. I already got half of it staked as well, so that'll be interesting. Ledge, anything else you're finding interesting around the space? I mean, there wasn't a huge amount today, so I wonder whether we just go straight into the big discussion. What do you think?
I think let's go to Funky quickly, who has his hand up, and then just move into the big discussion.
Let's do it.
Yeah, thanks, guys. Just a real quick question for Brad. Brad, can I have some loose ETH? Can I just do if I'm long Kaito, but I don't want to move my stake Kaito, I don't have a meaningful amount. Can I just actually zap in some straight ETH into the LP pool and then get exposure to both in some sense?
Not staying in ETH asset. The actual Pendle pool itself is just like PT. Like it actually is like direct Kaito exposure. So you would trade ETH for you'd be trading your ETH for Kaito.
Okay, no, that's cool. I'm cool with that. Okay, awesome, thanks.
But yeah, you can zap in like directly from ETH to Kaito. Yeah,
good stuff. Right, let's do it. Big macro / government news over the last few days. Multiple things kind of related, but also unrelated in some ways, but definitely related to the bigger price action. Ledge, I'm going to pass over to you. Take us through the various bits of news here. Any takes that you have them, I think it's probably helpful to talk about it because there's a variety of things going on.
Yeah, absolutely. Let's do it. There's actually quite a lot going on, quite some numbers to digest and go through. I'm going to start with the tax bill. That is the One Big Beautiful Bill Act, which has been voted through in the House committee. It is an extension of mostly the 2017 tax cuts and the Jobs Act that Trump had introduced back then. And this bill is estimated to add anywhere between 3.8 to 4.5 trillion US dollars to the USA's deficit over the next 10 years. If we take a look at some of the things, the list is way too long. I'm just going to look at some of the major items that are included by the tax bill. It is to permanently lower the income tax rates from Trump's 27 Tax Cuts and Jobs Act that are currently due to expire at the end of 2025. That alone comes at a 2.2 trillion cost. Extend the standard deduction and boost it by an additional $1,000 to $1,500 until 2029. That's $1.3 trillion. And then the next $1 trillion item is extending the increased alternative minimum tax exemption, which comes in at 1.4 trillion US dollars. That is the first part, and that had a couple of consequences, one of which was that Moody, one of the three big or major rating agencies, did downgrade the US from a AAA to a AA plus rating. That is not really surprising because all of the other agencies, the other two main players, had already done that downgrade quite a while ago. Nonetheless, that news wasn't really positively received by the stock markets. We can see that both the S&P 500 futures are down 1.1%, Nasdaq futures are down 1.4%. So that is happening on the futures, on the stock side of things. Taking a look at the 10-year Treasury yield, that is up significantly on the news. It's now at 4.55%. We did reach a low somewhere a month ago at 4%, have settled anywhere between 4.1 to 4.2, and over the last couple of days have increased quite a lot to go to that 4.5% yield. The other thing is taking a look at Japan, since we are talking about bonds and yield market, is a massive surge in Japan with the 40-year yield at 3.48%. That is a 20-year high. So the global bond market, it's not only the US, I think that's the key takeaway here. It is the global bond market. It's becoming more stressed with those higher yields. Now, what is the US saying? What is percent saying specifically on that? Basically, they're saying, look, the debt to GDP ratio is going up, but we can't change the debt side now. This is the tax bill that we want to get through. But what we can do and what we want to focus on is just prioritize GDP growth over spending cuts. And if you try to like abstract all of that into a number, this is where I want to take a quick look at Polymarket, waiting for it to load. There we go. This is one of the bets I'm monitoring very, very closely. And it's the US recession in 2025 question, because A, there's like a good amount of volume in there. It's 5.5 mil. And B, it has been pretty reactive to the news. And ultimately, I think it's just a good question to take the entire macro things and news and distill it down to the question, do we think that the US will hit a recession in 2025 or not? And that number has gone as high as almost like 70%. Just at the start of May, we've been at 65%. And now we have been trending down towards the low of 36%, 37 cents. We are up a bit. We're at 40%, but still, I think the key takeaway here is to say that the market, despite the little correction that we're seeing now in the S&P and NASDAQ futures, is still thinking that the chance of a recession is way lower, is almost half as low than it was just a couple of weeks ago. So quite a lot going on. We have a massive, massive tax bill that will increase the deficit of the US if it passes. That is one of the additional factors that ultimately led Moody's to downgrade the US AAA to AA plus, had an impact on stocks, had an impact on US bonds, again, also impact bond markets globally, which have been under a lot of stress. And ultimately, I think that makes for a very, very interesting setup to think more again about Bitcoin, to also maybe think about gold. But there's a lot more numbers to digest in there, but I'm going to stop.
Yeah.
That's getting a lot.
Yeah, let's go in a few different directions here. You mentioned gold, Ledge. Which way that's one thing I have not checked just yet. What has gold done in this moment? Because when treasury yields were spiking last time, you had this, and this is, as recent as a few weeks ago when, that Polymarket bet that you showed took the recession odds up towards 60%. You had the huge run into gold, went up to almost as high as 3.4K, I think. And in that time, stocks are obviously getting hammered, but Bitcoin really showed some strength in that period of time. So now we're, seeing the bond market come under pressure again. What's gold doing? And do you have an instinct as to how either gold or stocks and crypto kind of interplay here?
Yeah, absolutely. So gold, just to summarize that, has been on a massive run over the last year, up 30%, reached the all-time high at 3.4K per ounce. Then last week, we've seen the steepest drop in the gold price over the last 6 weeks, as everything looked like great for stocks and everything was full sending. Obviously, gold as a flight to safety became less interesting and did dump a bit. However, this Monday, gold is up again. It's up by $40. That means it's up by 1.3%, and it looks like it is trending up even more, and probably will continue to trend up even more over at least this day from the looks of it. In terms of the interplay between stocks and gold and all of that stuff, I think the one key thing is we are still in a president's market, right? Whatever Trump is doing, and he's making big moves, whether that's to do with tariffs in China, which have dominated the last week, whether that's to do with tax cuts, I feel like everything is very, very reactive to that. That includes the bonds, that includes the stock market, that includes gold as well. So personally, this downgrade that might have been displayed quite dramatically in the media, I don't think it matters too much, to be honest, because I think the US is still a very, very creditworthy country, obviously, on the one hand, and on the other hand, again, the other two rating agencies, Standard & Poor's and Fitch, had downgraded the US previously already. So I just think it's a bit of an overblown reaction. It's not something I'm like, oh my God, the US is going to go bankrupt because now all the three agencies don't see it a AAA anymore.
Yeah, I think that's a fair point. Let's go through some takes here. I mean, there's a number of directions we're going to take this, but there's a few specifically Bitcoin related ones, I guess, which were interesting, which related to two pieces of the news. I'm going to share my screen here, Ledge, if you can allow me to do so. This one from Spencer Hakimian said, this was in relation to the Trump tax bill advancing. As I said, this adds, and this is maybe, look, we're going to link this to this call that we had over the weekend and the thoughts we had. Although this might have become obvious to people already, I think definitely when Trump was coming in, there was at least a semblance, even a minuscule chance that they were going to take the deficit more seriously. They were talking about, look, this is not about Wall Street. This is about Main Street now. Everyone else has seen this endless bull market. You're going to have to take some pain now. We need to level the thing. And I think at least as part of that, there was an idea that, okay, we're going to cut costs with Doge, and, you know, maybe we're going to get serious about the debt. I think what has become clear is that that is not a serious proposition. By that, I mean, no one is going to get serious about the debt. Because on the tax bill that's going through, you're happy to add trillions to it in a kind of indiscriminate way over the next number of years. And then in addition to that, you have Besant's interview, which he gave on CNN, I think yesterday, or this came out yesterday, where they're very much, at a minimum, pushing some blame onto the previous administration when they were saying that, look, we inherited the 6.7% deficit to GDP. It's the highest outside of war or recession, and their focus is to grow the economy faster than the debt, meaning the debt is going to go up. We can't stop it going up. It's just about, we need to outgrow it, which had these two takes from some prominent people. Lynn Alden said they're basically in the nothing stops this train, so let's accelerate it phase. And then Felix from Blockworks said he's basically saying it explicitly now: short bonds, long nominal assets. Ledge, curious for your takes on these two takes, and just like the general set of ideas I just shared as well.
Yeah, starting with the last thing, I don't know if you want to short bonds. It's probably not something I'm going to play around with. Just to do that, on the long nominal assets thing, it's basically something that I said before. Again, I don't think the US is going to go broke as a part of that. The acceleration of GDP is probably the way to go with that. And I think that ultimately all of this setup is to benefit Bitcoin. And that's something that I'm going to foreshadow a bit of the conversation that we had over the weekend that we wanted to get to over the next couple of minutes. Either way, it's just another factor that is strengthening my decision to increase the overall BTC allocation of my own portfolio.
Okay, what about, okay, before we get into that, because I think that is an interesting one to talk about. Am I getting this right? Traditionally, with higher treasury yields, traditionally when the rates go up, people pivot into them, right? Because that's seen as something that is safer. Or are we then now saying that these are no longer considered as safe as before? Whether that's considering the latest downgrade by Moody's or just in general the stuff that has been going on with the tariffs and all the other things. And so I think the question I'm asking, even with the interplay question, is: do you see crypto continuing to decouple from the other stuff? And does this stuff actually set stocks back up on its upward trajectory? Because obviously there's like this decoupling thing. Stocks have obviously settled down and are not that far away from all-time highs again. Is it just back to correlation now in a way? It's like, look, we're not going to bother about the debt. We're going to try and grow the economy. Does that mean stocks and and crypto can go together?
I don't. This decoupling question is a hard one, because I feel like a lot of people talk about decoupling, but there's like no hard definition of what we actually mean by that. Do we mean that basically we see an inverse correlation, that when the, I don't know, say Nasdaq goes down, Bitcoin goes up? Or do we just mean by decoupling that when the stocks go up, Bitcoin goes up even more? Because I feel like that on days or maybe even weeks where we saw like stocks going down and BTC going up, everyone was like talking about the big decoupling. And I just don't see a massive decoupling happening in the sense of stocks absolutely crashing and Bitcoin full sending, just for the reason that so many states and countries, and obviously the US on a federal level, are flirting with the idea of establishing a strategic reserve. So much more institutional money gets involved in that. So I just don't think that this correlation between, for example, an Nasdaq and Bitcoin that we're seeing right now is going to go away. That does not mean that BTC cannot outperform, obviously, the stock indices that we benchmark it against. But without another like exogenous factor, I don't see, like, say, you know, the typical apocalyptic scenario of the traditional financial system, bonds market breakdown, whatever that might mean, and that would send everything down and crashing. And that might be a chance for BTC to actually decouple for that and like hold stronger. But I don't see a decoupling in the sense that the correlation between Nasdaq between Nasdaq and BTC will go away as a result of that.
Okay. Interesting. So what do we actually think? So we wrote this post. I wrote this post on Saturday after our long call, where we were trying to like digest where we thought the market was at and like what we think about how we're thinking about things moving forward. I want you to tell me whether this is still true, why we think this, and actually if there's any criticism of this. Brad, I definitely want to bring you in on the Hyperliquid thing, and obviously if you have any comments on anything else, just let us know. Let's go through, because I think this is kind of like setting out our stall in a way for the next period of time. This is just some of the bigger strategy. So we had a 2.5 hour call. The first and foremost was that I think one of the things I concluded was Trump is pro crypto, so we like him for that. But more than that, whether it was with the market going down and then him telling everyone to buy and then the market just going back up, like they've strategically positioned themselves so aggressively to profit from the industry. And there's a borderline thing there where it's like, okay, is this too much? Is it, you know, I think the Democrats will definitely have something to say, and it won't necessarily go away that the family and the administration are profiting maybe too much from it. But anyway, those things have become aligned. And I think just from that perspective only, during his administration, at a minimum, I think, given that Legendary said, I believe is true, we're in the president's market, I think that means it moves up. And then this was actually written before the debt stuff came out. But we said that, you know, the US debt is out of control. Any idea that Doge is going to curb it in any meaningful way is certainly wrong. It might make a nice headline or two, but basically it's business as usual with the aggressive spending. And then one of the knock-on effects for that is that I think in our conversation, or at least for me personally, I was comfortable holding more Bitcoin as a percentage more than ever. And the kind of nuanced point here is performing excellent on any reasonable time frame. We know that already. But maybe the personal reflection I had was that this is making private investments look really bad. Like really, really bad. Like I just recently did very well on a private investment, and it's like a 2x liquid, still waiting for the rest. And then I looked at where Bitcoin was at that point in time, and it's like 1.6. So it has marginally outperformed Bitcoin in a year. And that's just looking at the good one. Like you look back at all of the ones that are like disappearing or not around, and the private stuff is looking increasingly hard market to invest in, especially at the valuations that people are asking. Honestly, the valuations got so crazy, and some of them are still so crazy. You need a very attractive valuation to make a private investment look good right now. The next thing, Hyperliquid. This is, you know, we spoke a lot about it. That it's the best opportunity in crypto right now, in our opinion. One, spot price appreciation. It's better than many of the assets above it. So I think it can rise from the 18th best asset in crypto to the 10th. Potential further airdrop of more Hype to users. So that's like Hype itself. Hyper EVM protocol should have tokens too, so that'll be further airdrops. Hyperliquid team is small. I took this from the interview with Bell Curve, which is the Blockworks guys. Then an interview with Jeff, the founder, and they were saying like, look, we've got a small team. There's only 10 of us. There's 10 people in the Hyperliquid team. So that means that they want to allow other very valuable protocols to be built on top of Hyperliquid. They can't build them all themselves. They need other people to build them, which means that there should be wealth kind of being generated by other builders who build on top. And then maybe taking it in a different direction, we spoke about Kaito being just a brilliant product. It's really rolling out all kinds of rewards programs for so many different protocols. We've spoken about the financial benefit of building your social profile in this space for a long time. And I think it's beautifully positioned there for that trend to continue for the rest of the year. And then final quick point, robotics continue to interest us, and we're looking for ways to get exposure to that. So those were like the big ideas I think we spoke about. There's probably some smaller stuff that we'd want to talk about too. But just stopping there, Ledge, what do you want to come back on here? Anything that stands out to you? Then Brett, I want to come to you.
Yeah. I want to double down on the BTC part. I think that you have a significantly higher exposure to BTC in your portfolio than I do, and I'm catching up to that basically in terms of percentages. That is the one thing I directly took action on after or during the call even. The US debt is something that I don't think too much about that, to be honest. I feel like ever since I've been to university and before that in school, we had this story of like debt spiraling out of control, debt being higher than the GDP of specific countries, and that like escalating more and more and more. And yes, at some point it might break, and the system or the systems globally might break as a result of that. There's like nothing I can do about that. There's zero impact that it can have on that. So it's not something that I spend honestly too much time thinking about that. And it's also impossible to predict what will happen. Like if that breaks down, maybe people will run into Bitcoin and that will become the new thing. Or maybe people will like, fuck it, it's the same. Let's send everything to zero. So just because I don't have any impact on that, it's not something I want to think too much about. It's not saying that it's not relevant. It's obviously a very, very relevant thing, but that is just how I prefer to approach that. Hyperliquid, I'm gonna pause that for a second. I very much agree with what you said, but I'm also curious to then hear Brett's point of view on that. And then for the Kaito part, Whale dropped a brilliant analysis thread over the weekend, an article where he went through all of the opportunities in there. We've seen Kaito rewarding some of its users over and over again, both like on the side of the smaller creators as well as bigger creators, ranging from the Infinex to the Boop airdrops. And I just don't see this going away. And I feel like it's an extension of the conversation that we had on Friday, that you need to find the balance on like finding a good strategy to meaningfully participate in what's going on Kaito, but like still remaining authentic on the creator side. Funky always comes to mind as a great example of that. Someone who's been obviously very bullish on Polkadot for a long time and has managed to have this mind share for the Kaito yield earning as well. But yeah. Maybe I'll do say one thing on Hyperliquid. I think the key thing there is what you have said. It's just 10 people. There's going to be more ecosystem airdrops, and I feel like historically I've been really good at participating in an ecosystem and doing that in a way where I manage to increase my capital stack on the one hand, but then also get the rewards on top of that. So that's definitely where a lot of my capital already has flowed into over the weekend, doing some things, some LPing, lending that I didn't do before on Kaito, on Hyperliquid. Sorry.
Good stuff.
I listened to that same podcast with him, like with the Hyperliquid team, right? Did that not surprise you? 10 people?
No. I'm a big believer now. It didn't surprise me because I've heard Jeff speak before, And I feel like he's the kind of person who would do that kind of thing where it's like, let's stay lean. And I'm a big believer in the idea that huge things will get built by fewer and fewer people moving forward. So if only from that like kind of small thesis extrapolating out, I think it's completely possible. What made you not think that would have been the case?
I have been burned by protocols that receive funds and they don't scale to their operating levels, and because of that, they don't keep up with the market.
Interesting.
Friend Tech being example. Obviously, that's a little bit of an extreme, but it was 2 or 3 bros that just spun something up, earned a couple tens of millions of dollars in fees, and they're just like, "Yeah, man, we can't do whatever." Like, motherfucker, you have dozens of millions.
It's time to invest some of that back into it to find the people.
Yeah, and we constantly talk about how much is being generated by Hyperliquid in fees.
Good point.
And I look at 10 people and I go, "You've been doing this for a while. You have a shit ton of funds." Our team alone, the engineering team behind Mega ETH, 20 engineers, right? Like it's not a small endeavor. This stuff is not easy, right? If you're doing performance engineering and then listening to him talk a little bit, he's not a whiz. He's not a whiz kid. So it's like, okay, you're someone who is not giga-brained. You're smart. Like, you saw something in the world that, like, the new construction where the market was going, like, he saw something, but he's not severely intellectual, right? He did not impress me massively. Kind of understood some MEV, kind of understood what was going on in the market, kind of understood some stuff. He could speak to things, but he was not like a wonderkin, right? So like,
yeah,
now
maybe he's the business person though, right? Like, he's the business person. Maybe the other more technically minded people potentially.
Yeah, I mean, yeah, sure. Like, and he even admits that he doesn't overstep his bounds, which I respect, right? He's not saying like, "Oh, I know these things definitively. I'm gonna trick everyone." He's just a dude figuring it out, which is fine. Like, I respect it. They've developed an ecosystem. They developed a product. They developed a lot of things that are very smart. He's got a history in trading and stuff. So it's like, I give him credit and all that, but it makes me wonder. A lot of the things that you see in front of them as challenges are not easy challenges, right? They're industry problems. Like, so industry problems are not likely to be solved, in my opinion, by just someone rolling off the street and doing something. Like, they're very tough things. They take a very smart people many years to do things. So like, the things that are the headwinds for Hyperliquid are intense technical challenge. Like, you might need a brand new consensus mechanism, like a brand new one. You might need like some novel shit that's just not easy to come up with. So like, I heard that and say like, okay, he doesn't have a big team. He's not super intellectual. Like, did he stumble into something that's actually working? And like, what is the expected upper bound of something like that? It's like that got me thinking.
Okay. I welcome the alternative perspective. I think it's good. It's not something that I've heard before. So it's good to,
I do appreciate being lean, but it's just like, when I think of where this thing could potentially go, like, yeah, like Solana is an entire fucking ecosystem of dozens and dozens of people in a marketing machine and like all this shit, right? Like, it takes a lot to be turned into something that is powerful.
And if you think about it, one of the things, and I mean, who knows the way this stuff gets coordinated internally, right? But one of the big things that makes me bullish on Hyperliquid is that it's now got Bitcoin on it, it's now got ETH on it, it's got Sol on it, it's got Filecoin on it, right? They've integrated all these things. They ship faster than anyone on the perp side.
They're agile,
but that was only possible because Unit, which is a separate team, have brought that onto Hyperliquid. So,
which is great.
So there obviously has to be some type of coordination between these very, very significant protocols that are doing incredibly significant value accretive work for Hyperliquid in some, well, I mean, obviously Unit are making their own money, but it's added a huge amount of value to Hyperliquid, the fact that now spot Bitcoin can be there and ETH can be there and Sol can be there. So yeah, there must be some type of coordination going on in order to make sure those tough, challenging things get done. If not by like, their 10 people, then maybe some teams who they're close to. I don't know what those specific relationships are, but that would be my thought on that specific one.
In my mind, so like he talked about that on the podcast and said like, look, we're not going to encroach on too many people building an ecosystem, because that's always the scare of someone that the model that Hyperliquid has taken, right? Like, you guys have enshrined the most valuable thing Like, what is to say that you guys won't stretch that bubble and take over whatever it is that I'm building, right? Like, why would I build next to you if you're just eventually going to swallow me, right? Like, that sucks.
Yeah.
Same, like, could be the unit guys. And like, that was his defense. It's like, dude, we're a small team. We don't have intention to do stuff. We want people to take this stuff over. The downside and the upside of that is the downside being, well, okay, you have potentially amateurs stepping in to do all of this other stuff, right? So all of the scaffolding around the core Hyperliquid product may be weak and or exploitable and or whatever. The upside is that like there's and the other downside is that means that value is not being driven to hype the token, right? That is all surface area for value leak.
I like the critical cap that we got on. Final take, because we run over time and I've got to run after this one. 60 seconds, Brad, on despite all those things, you had a big post that went pretty viral, to be honest, on why you did want
impressions. People, I think there's a lot of people that resonated with it.
People thought it was good. What was, if you give a quick summary of like what the spirit of that was before we close up?
Yeah. Okay. So TLDR is that, like, again, I've been hate watching this thing. You guys have been hearing me talk about this thing for the last like month and a half. Anyways, I just sat down and I go like, why would I move now, even though we're nearing all-time highs? And it comes down to a few things. One, I've kind of black-pilled myself on infrastructure broadly, right? I think all this stuff is going to compress lower. The amount of value that's going to be captured by the actual chain itself, that's the Ethereum's, Solana's, Barachains of the world. All these things, when it comes to just like raw infrastructure costs, are just going to continue to get compressed. So, okay, value is going to go to the applications. This is a protocol that has not only enshrined an application, they've enshrined the most valuable application, and it's good. People are going there, it's generating fees, it's winning. So like, if you think the market is going to continue to value these things on a DCF basis, like based on fees generated, you see Rev is a popular metric people are touting these days, then like Hyperliquid is going to probably win. Okay, not win, but like look very good, right? Underpriced relatively. So, okay, so I saw that, and then I see, okay, what's going on in the current market? How do I get exposure to this thing? I've been trying to get exposure to hype for fucking a month, but it's been such a pain in the dick that it's taken me this long to do it as a crypto native with a lot of assets on chain, right? Like, okay, so that means there's still friction. Good. Like if there's less friction, that means people can get exposure to it, whether it's on sexes or even on chain. I'm not hearing a lot of people on the timeline talk about it when I'm in spaces, whenever I'm, you see people reply with Hyperliquid, but it's not like the normal crowd. It's not the Solana crowd. It's these deep investor people. So I'm like, okay, there's still people that lack exposure to it. And then broadly, I was just like, I think it's where the puck is going in a lot of this stuff. So it's like, I saw all those things. Like, I think there's still opportunity here. And I honestly have just like forced myself to get through and do it. Allocate, like I said, only 10% of what I intend to buy, just to like take the edge off for myself. And then I'll just continue to watch. I'm one click away now instead of like a process away.
There we go. I think that's a smart way to go about it. When you're just like looking for an entry, you can't get one. It's like, okay, well, at least just clip something in to feel it, to get a taste of it. And then you can figure out how to get the rest of it in over time. But look, guys, I think we're going to have to extend this conversation tomorrow, and we'll like chunk it up in across this week, because there's a lot of interesting things going on at the moment. A lot of big thoughts we had. The macro situation is obviously changing. It's still the president's market. Things are adjusting as like on a live basis sometimes. But it feels like we did come to some conviction there. Hope that was an interesting discussion on both the macro stuff as well as some of our personal thoughts over the weekend, which we shared in writing and here. Thanks so much for joining. As always, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X Video, YouTube, Apple, and Spotify too. Thanks to Legendary and Bread, as always, for co-hosting with me, and Funk for his contributions. Take care. Have a wonderful day. We will see you tomorrow. Bye-bye.